Hi guys, welcome back to this Money Control live stream. It's a Monday morning, important week in terms of rate action by global central banks. You have the Fed rate decision on Wednesday night, you have the Bank of Japan's interest rate decision, and you have the PBOC that will be coming out with its prime lending rates on Friday. So yes, lots of stuff to watch out for in terms of rate action from global central banks. But recapping Friday's market action, we saw a very good comeback from the day's low. In fact, we staged a very good recovery from the 20 DMA level and managed to end above that level as well. 24,700, that was one level that we were watching out for on the upside, and we managed to shut shop above that level. So this week, we'll be watching out for whether or not we manage to make a dash at that 25,000 level again or not. Which way will we swing after the wild swings that we saw on Friday the 13th? That's the big question that's on everyone's mind. But lots of stocks to watch out for today, the likes of Dixon Tech, you have Vedanta that will be considering an interim dividend again. And a lot of other stocks like JK Paper will also be in focus. We'll try and take them up with our experts. Your stock related queries will also be in focus, so keep them coming in on a live feed on YouTube. We'll try and take them up. In terms of cues, of course, GIFT Nifty is hinting at a negative start. So, let's see if we, kick off the day on a subdued note. Who knows if we, manage to stage a good up move as the session progresses, as has been the case on Friday. That will be interesting to watch out for. But of course, before we move any further and get our experts on the show, let's take a look at the top headlines at this hour. Stocks closed mixed on Wall Street on Friday. The Dow corrects for the 7th straight session, while the S&P 500 dips for the 4th session out of the last 5, ahead of the Federal Reserve's policy decision later this week. Stocks in the Asia-Pacific trade mixed as investors look ahead to policy decisions from the Federal Reserve, the Bank of Japan and China throughout the week. The GIFT Nifty is suggesting a lower start for the Indian market. Brent crude prices rise to hit a 3-week high above $74 a barrel mark on expectations of additional sanctions on Russia and Iran. Meanwhile, gold prices come off 5-week highs as the dollar strengthens. And tabla maestro Zakir Hussain passed away in the early hours of Monday at the age of 73. The Padma Vibhushan awardee succumbed to respiratory complications after being hospitalized for 2 weeks for heart and lung ailments. Well, on that note, let's take a look at the cues for trade this morning. Of course, it was a positive close and Friday's up move helped the indices log gains for the week. So both the Nifty and Sensex gained somewhere around 0.5% or thereabouts for the week. Friday's move was phenomenal. We saw the Nifty and Sensex recovering nearly 3% from the day's low. So we broke below that 20 DMA level and we staged a very good recovery after that. The Nifty Bank Index as well rose over 1100 points from the day's low, led by stocks like ICICI Bank and HDFC Bank. And the Nifty IT Index, has been seeing very good traction. In fact, it has been hitting 52-week highs as well. In the last 2 weeks, the Nifty IT Index is up nearly 7%. Looking at the other pockets like PSU banks and FMCG, these were among the major drags last week. In terms of FNOQs, the put-call ratio on the Nifty climbed to 1.12 from 1.02 level in the previous session. And there are a couple of stocks that have entered the futures and options ban. Manappuram Finance and SAIL, these are some the two counters that have entered the ban list. In terms of stocks that continue to be in F&O ban are the likes of Granules India, Hindustan Copper, Metropolis Healthcare, Nalco, PVR Inox, RBL Bank. Fund flows, of course, we've been pointing out that, foreigners have kind of started coming back to the Indian market. If you look at the December figure, it is in excess of $3.2 billion as of now, till date, month till date. In Friday's session, we saw the FIIs emerging as net buyers to the tune of 2,300 crore rupees in the cash market. On the flip side, domestic investors were net sellers for a change. and they sold stocks worth 732 crores in the cash market. So that was the trade setup for today. But to understand how the market is expected to behave this week, let me bring on board our technical guest for today. Joining me is Osho Krishan of Angel One. Osho, great to have you on the show as always. What do you make of the kind of moves that we saw in the market on Friday? Breaking below that 20 DMA level and then recovering almost 3% from day's low. Is there a change in the setup? What are the signals that you're getting from the charts? And 25,000, do you think that could be a possibility? Because that's just 300 odd points away from where we are at right now.
Very good morning, Nandita. Firstly, thank you for inviting me at your show. Well, as you mentioned, for in the last trading session for Nifty, we have seen a very huge volatility, approximately 600 odd points in the benchmark index itself. After testing the lows of approximately 24,180, the counter have emerged as a very strong closing. So I expect that there should be a continuity on the higher trend, although not very much aggressive on the higher front, and expecting that any dips, looking at the overall global markets, that there has been a very flat to negative closure of US markets, and even Asian markets are having a very flat trade. So I am expecting that there can be a decent opening for our market, but tips should be auguring very well for the buyers, because when we have to talk about the derivative front, then we are witnessing a decent compilation of put writers among the zone of 24,600 and 500. That means these levels should be acting as a very strong support in the near period, while 25,000 call writers have made a very significant positions at 25,000. So I am expecting that that is a very stiff resistance for Nifty in the coming period. So approximately 24,600 is the zone where one should try to accumulate or look for buying opportunity in Nifty, while on the higher end, approximately 25,000 is the mark where one should try to book their profits also. There is a very interesting development that has been taken place, that the 50% Fibonacci retracement of the decline is approximately 24,770 on the spot levels, and we are hovering around the same zone. So there can be some kind of tentativeness around these zones, but as we recover from the higher end, as we recover on the higher end 24,800 or something, then that should also provide very positive trigger in our market. So either one should have an approach of buy above 24,800, or one should have an approach of buy on dips of 24,600.
Okay, 24,600 to 24,800. That's one range that has been laid down by Osho. Buy either below around 24,600 or above 24,800. But looking at the Bank Nifty, banking stocks have been doing well, especially the likes of HDFC Bank and ICICI Bank. And in Friday's session as well, the Nifty Bank Index also staged a good comeback from the day's low. This morning as well, it's looking like a flattish start for the market. In the pre-open at least, the Nifty is almost 15 points down, and the Bank Nifty is also down 80 odd points. So 53,500. Would you be working with that as a crucial support level, or would you keep a little lower level on the support side? But for the Nifty Bank Index to make a dash at that 52-week high, could that be a possibility in the coming sessions?
See, overall,
hold that thought, Osho. I think markets have just hold on. I think I'll come to you for this question. But markets have opened up, and we are getting the first ticks at the current juncture. Just want to quickly, wade through the market open first. It's a subdued start, as was being expected. 20-point cut on the Nifty and just about 90-point cut on the Sensex. But the mid-cap index has started the day on a strong note. Friday's session, broader end of the markets were underperforming. But obviously, in the last couple of weeks, we saw a fair bit of outperformance coming in from the broader end of the markets. And that trend, seems to be continuing today as well. 0.3% kind of gain coming in on the mid-cap index. But looking at some of the sectors, Bank Nifty has started on the back foot. But let's take a look at which sector is taking the lead at the current juncture. Most of the sectors are extremely flat. Of course, early days to really point out a trend. But Metal Pack is trading in the positive zone. No big moves, but it is in the positive zone. Remember, Friday's session, metals were out of favor. Autos, banks, IT, all of them, in the red at the current juncture. So no clear trend in terms of, a leadership in terms of sectors at the current juncture. But in terms of stock movers, on the Nifty, you have Hindalco, that's the top gainer, just about 0.5% gains there. Shriram Finance, Cipla, Reliance Industries as well among gainers. Wipro, Tata Steel, HCL Tech, some tech names, some metal names, some pharma names, and these are some of the stocks that are taking the lead at the current juncture. On the flip side, you have JSW Steel, NTPC, M&M, life insurance names like HDFC, some auto names like Hero Moto, aside of M&M. In the red, and so is HDFC Bank. HUL as well in the red. FMCG saw good traction on Friday, but HUL under pressure at the current juncture. Osho, coming back to you then, I was talking about the Nifty Bank Index. 53,500, would you be working with that level as a support now? Because we have seen good traction in the bank index. So, are there any chances of the index making a dash at that 54,000 level, or even its 52-week highs anytime soon? Osho, your audio is not coming through. I think you're on mute.
Oh, I'm really sorry. I was on mute. So overall, looking at the banking sector, the private sector banks and NBFCs are looking very positive to me. Majority of the counters like ICICI Bank, Kotak Bank, they have seen a very drastic movement in the last week, and I'm expecting that there can be a very strong continuity in those kind of stocks related to Bank Nifty. So obviously, if I'm expecting a movement in the heavyweight, so obviously there will be a decent movement that can be seen in the Bank Nifty. But for Bank Nifty, the crucial zone that one have to eye is approximately 53,600 odd levels on the higher end. The time it surpasses the zone of 53,600, then we can see approximately 400 odd points of movement in intraday session, while any kind of dip towards the zone of 53,300 should also augur very well for the buyer. So there will be a buying opportunity only in the Bank Nifty, either 150 or 200 points on the lower front, or approximately 100 points from here on the higher front, after which one can definitely see a decent movement, decent traction in the banking space. And overall, there can be stock-specific actions that will that will outperform the market in today's period. So I am expecting decent movement in NBFCs and private sector bank for the day.
All right, that's the view. Private sector banks and some NBFCs to watch out for. Let's talk about Reliance Industries. Among gainers today, 0.4% higher at the current juncture. Almost, it's inching towards that 1300 level. But any trend emerging when it comes to the charts of Reliance Industries? It was taking the lead and emerging, as the top contributor to Nifty gains, last couple of weeks. But in the last 1 month, the stock hasn't really made a lot of headway. What kind of higher level would you be watching out for on Reliance Industries, and what should one keep as a stop loss if they have positions?
See, overall, this counter have seen a decent traction in 3 weeks. Last week, there has been some kind of profit booking or correction from the higher levels, but approximately still hovering at a very strong support zone. So for short-term traders, approximately 1260, 1200, 1255, 1250 should be the very strong support zone for this counter. So that should be kept as a very strong stop loss, and buying traction can be seen in this week. And I'm expecting a immediate target being a very heavyweight. There is not very much aggressive target, but approximately 1320 should be seen in this week in the Reliance industry. And once there will be any movement beyond 1320, then we can see approximately 60 points of higher movement from there onwards. So 1380 is eventual target on a short to medium term time frame. But for intra week, I am expecting approximately 1320 to get retested in Reliance.
Okay, that's the view on Reliance Industries. But let's talk about Bharat Forge as well. This stock is in focus because its arm, Kalyani Strategic, has acquired a 25% stake in Edge Lab for $2.5 million. Now, the investment aligns with its strategic focus on enhancing its capabilities in high-tech defense and aerospace manufacturing. Defense names, as we all know, have seen a sizable correction from highs. Some of them are back in traction, the likes of HAL, Cochin Shipyard. they are seeing buying interest now on the back of order wins from the government, right? But particularly for Bharat Forge, no strong up move has been witnessed in the last 1 month or so. It has seen a 4% up move, but if you compare it with the likes of the other defense names, some of them which are seeing traction now, the move hasn't been all that great. So looking at the last 5 days, it was fairly range bound, 1% kind of a loss there, whoever was working with a 5-day time horizon. But going forward, what should one do? Are there any pointed signals that are emerging from the charts, or is it expected to remain sideways?
See, overall, this counter is making a very strong consolidation, approximately near around the weekly breakout zone, which was approximately seen in the month of May. 1300 zone was seen as a breakout in the month of May. So, and in the last 4 weeks, the counter has been taking a very strong consolidation around the same levels. So, I expect that there is no traction, no positive traction as of now, but definitely it is being seen that the counter is making a very strong base setup for itself, and the time it crosses the 200 the simple moving average and even the short term moving average of around 1400 odd levels, then we can see positive traction in the coming period. So overall, one should definitely keep this counter in their watch list. The time it surpasses the zone of 1400, that should be providing very strong opportunity to accumulate for a higher returns. Approximately 1500 1480 to 1500 will be the immediate target that one can expect in the short term period.
Okay, that's the view on Bharat Forge. But one stock that's in focus this morning is Dixon Tech, seeing good traction, I think 3% up at the current juncture. It has formed a JV with Vivo India to manufacture smartphones in India. Now, in this JV, Dixon will hold somewhere around 51% stake, and Vivo India will hold somewhere around 49% stake. 24 or 25% kind of an up move on Dixon Tech in the last 1 month. It hit a fresh 52-week high, today itself. Is this breakout stock continuing to see a breakout here on, or do you think it's going to top out sometime soon? Or do you think 20,000 on the charts is also a possibility in the next couple of months?
See, overall, this counter is into a very strong secular uptrend. There has been no kind of breather or profit booking that has been witnessed. In this year, it has emerged approximately 180 odd percent, and there has been very strong momentum. For today, there is a news flow that on the back of which we are witnessing a very strong traction coming back into this counter. But overall, technically, if I have to say, then this counter is placed at a very overstretched parameter. So fresh entry at these levels will be something that one should not do. If someone is already having a position, then definitely keep on holding a position with a trailing stop loss. Firstly, for 17,500 is supposed to be a very strong support in the short term period, while overall looking at the trend of this counter, the 20-day exponential moving average always cushions any kind of correction in this counter. So I expect overall in the short term, 16,700 is the zone which is a very strong support, and in the very immediate basis, 17,500 is the cushioning zone in this counter. Until the momentum persists, one should definitely try to stay invested and ride the momentum.
All right, ride the momentum in Dixon Tech. That's the call. With that, let's shift our focus to some viewer queries that we are getting this morning. I want to take up the first query from Gopi. It's on IDFC First Bank. She wants to know, is it going to see any kind of bounce back or not? Because this stock, look at all the long-term charts. It has been stuck in a downtrend. In fact, it's very close to its 52-week lows as well. How far or how much of a correction is left? Do you expect more downside below? Do you expect it to go below its 52-week lows, or do you think that the sell-off is kind of plateauing out now and we could see some bit of a recovery?
See, there is no kind of respite in this counter. It is into a very strong corrective phase, going through the formation of lower lows, lower highs, and the short-term moving average is making a very strong resistance for this counter. So I'm expecting until it crosses the zone of 68 on a very short-term period, there can be continuation on the downward movement. While 68, a breakout above 68 can only give some kind of breather or a decent bounce in this counter for a higher target of 74. So I'm not very much aggressive. The overall counter looks very weak, even in such kind of market where majority of the counters have started witnessing resurgence from the low. So this counter has seen no kind of breather or no kind of revival in the recent period. So I would rather say to stay sidelined from this counter until there is a very strong reversal, or if one is already having the position, then 52-week low should be the stop loss to hold this counter for short term period.
All right, that's the view on IDFC First. Hope that answers your query. The next query is coming in from Raj Nihalani. He wants to know your thoughts on HCC, Hindustan Construction. The stock has seen a very good recovery, right? In the last 1 month, you've seen a 35% kind of a move. 47 is where it's at the current juncture. Is it a hold or a sell according to you? And if somebody wants to take fresh positions, should they go for a positional trade here, or would you recommend a more short-term trade?
See, the counter have seen a very decent movement from the recent breakout of 42 odd levels and hovering around 47 odd levels. But if I have to look at the overall trajectory, then from the zone of 36, there has been a vertical rally towards 47 odd levels. In the last 2 weeks, the stock is consolidating, which is a kind of a breather after the decent rally, and overall the structure has turned bullish in this counter. The short-term moving averages are witnessing a very strong positive crossover over the long-term period at moving averages. So from here onwards, the technical parameters look very promising, and I expect that in the short-term period, near about 51 to 52 is the price range where one can definitely expect the counter to move in the short-term period. So on the lower end, 44, 45 is the very strong support, and one can definitely expect a target of 52 in the short term.
All right, expect a target of 52 in the short term on an HCC. Next query from Debu K wants to know your thoughts on some of these capital market theme related stocks like CAMS and CDSL. CDSL hit a fresh 52-week high today itself. It has been consistently hitting 52-week highs. CAMS as well has done well. If you look at the 1 month chart, last 5 days weren't all that great. But from a risk reward standpoint, how are these stocks looking to you now? The likes of CDSL. Even BSE for that matter, is it a good time to enter, or just wait for some bit of a dip to come in before looking at some of these stocks?
See, overall, there has been a very positive momentum in these counters throughout, and these counters coming into FNO segment has given a very strong momentum in the recent period. So overall, majority of the counters are at its lifetime high levels, but overall the technical structure is quite overly stretched. So I would rather advise to stay invested if someone is already having position with a trailing stop losses, or if someone wants to accumulate in a fresh manner, then wait for some kind of correction. If there will be a decent correction in majority of the time frame or in majority of the technical structure, then definitely one can start accumulating these counters from medium to long term perspective. Overall, the technical structure is very positive, but the recent recent movement has given a very strong outsurgence and has provided the counter into a overbought territory. So I would be rather saying that one should stay invested with their holdings, or wait for some kind of profit booking in these counters to accumulate from a fresh point of view.
Okay, that's about some of these capital market names. Hope that answers your query. Next query is coming in from Maheshwar Bhanu. He wants to know your thoughts on KFintech for the long term. The stock has been stuck in a range, and with a 2 to 3 year perspective, what kind of returns can one expect? Purely looking at the long term charts, how would you, or what would you suggest?
See, overall, the technical structure is very positive. We are expecting a very decent movement in this counter. For short term, yes, there can be some kind of profit booking after a very strong rally from the zone of 1000 towards 1300 odd level. So there can be a possibility of testing the zone of 1150 to 1180 in the short term period. But overall, the technical structure is very positive on a broader time frame. So I expect that these kind of blip should be providing very strong accumulation zone for to reaccumulate the counter for investors. And over a long-term perspective, one can definitely expect a very strong returns in this counter. For example, on month-basis, we have always witnessed near about 4 to 5% of positive movement in this count, and this year has been very positive, approximately 155, 160% of higher movement. So one can definitely stay invested or can even accumulate freshly from medium to long term perspective.
Okay, that's the view. The long-term charts are looking pretty encouraging on OK FinTech. Hope that answers your query. I also want to get in the next query. It's on NTPC. K. Rajendra Prasad wants to know your thoughts on this. How are some of these power stocks poised on the charts right now? The likes of NTPC, Tata Power, even Coal India for that matter. Is it worth taking a look at the current juncture if somebody has, say, a 5 to 6 month time horizon and for a longer duration as well, say 1 to 2 years? I think there seems to be some kind of an audio issue with Osho. We'll try and establish it back with him. But just quickly taking a look at the market then, we had seen a subdued start, and yes, we are around that 24,700 mark. Haven't really given it up as such, but it was a subdued start as was being expected, given the fact that the GIFT Nifty was also hinting at that. The broad end of the markets, however, continues to show good traction at the current juncture. But on that note, let me bring on board our next guest for today. Joining me is Prakash Diwan, market expert, well-known name in the market really. Prakash, great to have you on the show. It's been a long time and a lot has happened since then, right? We came off quite a bit from record levels. Then we saw a good recovery as well. Half of the losses that we saw have been recouped. And the kind of swings that we saw on Friday were quite baffling, right? But here on, which direction do you think the market will take? Do you think we will remain sideways? The time-wise correction, is it expected to continue as we step into New Year? And secondly, for 2025 itself, is replicating 2024 is completely out of the picture?
So, Nandita, very clearly, I think the market, the year end is always spectacularly volatile. There are aspirations and compulsions that make people trade both ways. People will want to book profits and go home over the new year with enough to deserve a bonus. And there will be a lot of them who would see that as an opportunity to buy into the markets. But my sense is that we are staring at an opportunity that at a market which will give you an opportunity in the next couple of months, which will be far more promising than what you see in the next 15 days. So if you extend your time horizon to buy till about Feb end, March beginning, that's when all the ramifications of the US announcements, the Donald Trump administration policies, and all of that will get digested. That's the time to kind of look at things. The market might move up a bit. That's fine. You'll have to live with that.
Right. Talking about, foreign flows as well, after months of selling, there's some respite in December, at least on a month-to-date basis, good $3 billion have been pumped in.
Yeah.
But, do you think that's transitory? Because typically towards the end of the year, you see foreign investors kind of, being in holiday mode and, the flows are pretty much sideways, so to say. But is this a trend reversal, or is it too early to call it a trend reversal? Because dollar strength is something that, one has to take into account. Do you expect flows to remain sideways till budget at least, and perhaps post that you could see them come back with a vengeance?
Quite likely. I mean, I don't know about the vengeance part, coming back with the vengeance part, but the budget is going to be a fairly interesting one this time around. Because remember last time we had a truncated kind of a session. The budget was not completely something that could do justice to the government's policy stance. This budget, the 25 budget, is going to be fairly significant because it paves the way for the next 4 years of the current administration to start out the growth trajectory that they would like to. And a lot of work around capital expenditure, which would trickle down to consumption revival. All of that is anticipated and will happen. And remember, FIs coming back is something which is also dependent on what other markets, appear with in terms of attractiveness, whether it's China, whether it's some of the other emerging markets like Mexico and all. So if the Trump administration comes up with things which are not as adverse for us as much as for some of the other markets, we will see money come back. So I'm quite hopeful of that. And by the time the valuation will also start getting slightly more, charitable, will be less charitable than what they've been right now. They've been so stretched that at times you actually get tempted to book profits just on the basis of valuation, which is not the right way to do always. But for FI money, it does happen. Valuations do trigger that kind of a reversal.
Right, so let's talk about certain pockets then. I want to touch upon the consumption space, this whole theme of, urban consumption slowing down. We've seen FMCG stocks react to it, earnings have been under pressure. But do you think it's just a 1 to 2 quarter phenomenon? Do you think growth has bottomed out? How would you play some of these traditional names? We'll talk about the quick commerce players and the other end of the consumption basket after this question. But traditional FMCG names, given the fact that the Q3 update from Godrej Consumer was also fairly disappointing, how should one really look at this basket right now?
Yeah, so that's an interesting, segment that has confounded people. Traditionally, FMCG was the go-to segment in troubled times and volatile times. But recent quarters have seen companies clock numbers which have not been very interesting to justify valuations of 65, 75 times from some of the frontline names. But if you read between the lines on the Godrej consumer commentary, they're now attributing a lot of that slowdown in volume growth to not to structural but cyclical issues, which means that this is something that could reverse fairly quickly according to them. And a brokerage note actually tries to capture that salience and has actually moved the target up. But when you look at FMCG, Nandita, you need to understand that India is stratified into very broadly three different segments. The first 8-10% is the affluent class. It doesn't get impacted. Those products, those price points will always continue to grow, and that's the way impact of the affluence that's building up. This next 40-50% is the aspirational class, which will look for right kind of products, right kind of price points. If you give them that, they'll definitely come to consume. And the last 40-50% is the one that struggles with the income levels and impact of various employment, wages, so much of factors that would adversely impact that segment. That's where the slowdown is. So I would believe that if you pick up companies which cater to the first 10 and the next 40-50%, you'll be fairly safe. And by virtue of that, to make it simple, look at how a Page industry is done. It's just 8-10% short of its. I'm not recommending it at this level, but I'm just saying how things have moved in that segment. You look at some of the other products that ITC has, which fit into both these categories. ITC not got impacted, but it's the levers of the world, the HULs and the Britannias which have got impacted. But choose choose from the right segment, and I think you will still be able to get FMCG to deliver in the next 12-18 months a fairly decent market outperformance.
Sure, and let's now talk about the other end of the spectrum, right? The quick commerce segment where all the action seems to be at the current juncture. Things are only heating up. You have Swiggy that has made its market debut. Vishal Mega Mart, has also launched its pilot to test waters. How do you see the valuation gap between Zomato and Swiggy now? I'm alluding to another report that I read, that was from a global brokerage house where they flagged off that the unit economy is unsustainable in India and, it's time to be a little cautious on these companies. But given the fact that, they have such a large runway for growth, would you concur with that report or would you differ with that report? How would you look at the entire quick commerce space that's like heating up so much now?
No, I think that space is here to stay. The consumer's behavior is something that takes long to change on both sides. Once you got used to the comfort and convenience of getting things delivered to your doorstep, it's extremely unlikely that behavior will reverse. The other thing that happens is as the geographies grow, the pin codes and the coverage grow for most of these players, they will be able to get economies of scale far more rapidly than they've done in the first phase of growth. So quick commerce is now going to Bharat and not to in India. And when that happens, there's no stopping it. There will be structural changes. There will be supply chain disruptions that will keep coming, and people will overcome those. but I don't see any reason why that would happen. But when it comes to the stocks, some of them probably are riding on very high expectations. It could take longer, but it would still deliver. So if you end up buying into any of these names, whether it's a Swiggy, irrespective of valuation gap between Swiggy and Zomato, you will get your return. But you have to be there for the long haul. You cannot expect this to be like a quick, it's quick commerce, but it's not quick gains, right? So it would take much longer to build. But I'm quite sure that they'll outperform broader markets. And within retail also, you mentioned Vishal Mega Mart. Look at the footprint. I mean, these are markets that are still kind of to move from the unorganized to the organized space. There's so much of depth that can get created, so much of breadth that can get created. So there's an ample opportunity. I mean, we've seen what Zudio has done to Trend, or what DMart has done to itself in terms of expansion. So there's a lot going for retail. India is the fourth largest global market, with the population which is probably the largest. So you still have ample room to move in that side. But don't get carried away. Be cautious on the valuation side is also a word of this thing advice. But buy them in on bad days and times when markets give you that opportunity, because these stories are more structurally long term than what you can imagine.
Sure. And what's the read-through on autos now? We saw some bit of, up move or recovery when it comes to festive sales, after a quiet start. Vahan data did point out that there's been a pickup in festive sales. But recent data is once again pointing out, the FADA data that came out, that there is slowdown in four-wheeler sales. But two-wheelers, on the other hand, continue to do well. What is the read through? Because all the data that's coming out is a bit confusing, right? So how should one navigate this whole, festive data and, sales data? How should one look at it?
No, it is confusing. It is confusing because there's no distinctive trend that's emerged out of most sales numbers. You have a sales bump up in some of the categories, and you attribute it to festive season, factors. And then you have some of the companies that have done well on absolute basis because of product superiority. So, it's fairly micro in terms of what's happening to each of these companies. You'll have to go to the product portfolio level, average realization improvements and all of that. But that's for the passenger cars largely. I would believe the market is still trying to find its feet in terms of what it wants to, which segments it wants to focus on in terms of growth, whether it's the hybrids, whether it's the EVs, whether it's, conventional IC engines. So everybody is a bit, it's experimenting, it's iterative at this point, Nandita. But the clear runway to growth seems to be from the two-wheeler side. Look at how, the ramp-ups are happening. I believe the adaptation to EV will be very rapid on two-wheelers once it reaches that tipping point. And the biggest factor, as all we know, is going to be the charging infrastructure. Once I have the comfort of knowing that within the next 2 kilometers, I have a charging point which is accessible, I don't mind moving around on an EV, without the burden of worrying about where to get this charge from. So this is very similar to when CNG came in. Adaptation took time. CNG outlets started mushrooming, and look at how CNG got so omnipresent. So it will happen. I don't know when, but it's you need to work towards that. Look at some of the auto ancillaries. There is enough and more that's happening in terms of companies moving towards supplying to EV OEMs rather than the conventional IC engine. So that's a big upside that could come, irrespective of which player gets market share, whether Ola and Bajaj fight it out. You will have an OEM that could supply to both. So, look at that. I mean, you could have an ancillary, supplying to both. That's a pocket you need.
Sure. Last question really, Prakash. Whoever I have spoken to, whichever expert I have spoken to, majority of them have said that 2025 will be, a year for stock pickers, go with a bottoms-up approach. It will be a year which will separate the men from the boys. So where would you be looking out for these men? Which pockets?
So which year has not been like that? I think every year starts with that hope and promise of being a stock pickers market. And for all the right reasons, 2025 could be more glorious than what we right now imagine, because we've got numbers on Q2 earnings or on the GDP side a bit soft. And that's kind of getting reflected in the valuations in certain pockets. I am of the belief that the India story will probably start peaking out, not peaking out, but picking up in 2025 in a way which is far more superior to what we've seen in the last 2, 3 years. So, lots of pockets. You could have capital goods, infrastructure, defense. On the other side, you would have specialty chemicals, cement. India is going to be awake certainly after the budget, and the animal spirits would probably be let loose. And when that happens, the building of the nation brings you a lot of sectors to the forefront, and that's what's going to happen. It's going to be cement, steel, roads, sports, airports. So that's where you need to focus on, because it's a country on the move. It's not just certain businesses or business houses that are on the move. So don't miss out on it. Is my thought. You just need to be sitting with cash ready to be deployed first half of 25.
All right, capex, defense, manufacturing, that will be the dominant theme in 2025 according to Prakash. With that, Prakash, I'm afraid we are running out of time. Time to call it a day. But if we don't get to meet before New Year's, I wish you a very happy 2025 and a very prosperous one at that. And I reckon you will be celebrating your New Year's in Goa, so have a great time.
Thank you. Thank you to you and to all our viewers. A very, very happy 2020. Thank you. Thanks
a lot for the interview. Well, on that note, just want to take a quick look at the market then. We've come off the opening lows. We are just about 25 odd point lower on the Nifty. 24,750, we are around about that level. Let's see, whether we manage to edge back into the green or not. But the mid-cap index has managed to pick up some more strength. So it's a 0.5% gain there. Bank Nifty has also managed to edge back into the green, and if you look at some of the movers, IndusInd Bank is topping the charts at the current juncture, followed by a Shriram Finance. HDFC Life has managed to snap out of its downtrend. Reliance Industries is showing good traction, and some of the NBFCs like Bajaj Finance aside of Shriram Finance are doing well, and the PSU heavyweight SBI is also among gainers, and so are some of the cement names. But what's not doing well is JSW Steel, that's at the bottom of the heap. Top Nifty loser. FMCG names, consumption names are under pressure. The likes of HUL, Nestle India, Titan, you can see them coming under pressure, and so are some of the auto names like M&M as well as Hero MotoCorp. But I think with that, we have completely timed out on this edition of Opening Bell. I would like to thank you for joining in. Of course, we will be back with the market at 3:30 p.m. So don't forget to tune in for that. Stay tuned to Money Control until then for all your other news and updates, and have a great day.